Hey, it's Mack with PriceActionTradingSystem.com. It's Wednesday, it's April 8th. This will be our chart lesson for the day. And in the end, it was really just another range day. Even with the FOMC news coming out, it was a range day. And it just shows you how the price action, it led you to see it early on. And then even when the news comes out, it takes off like crazy. But guess what? It still respects the price action. The price action is still right. You bounced off the lows of the range, and you bounced off the highs of the range. I mean, that is a huge move up. And if you can catch that, this is really probably worth taking right here. It's just right after the 1 o'clock hour, so everything is still really um, emotional. Everything is still really volatile at this point, so it's a little risky entering. But when you're that far away from the EMA and you got strong support right there, you figure prices are going to at least snap back to the EMA. So I really want to circle that too, and I really want to make it blue. But because of the fact that it's an FOMC day and it's so volatile, I'll just circle that one green. But man, look at that trade. If you catch that one trade, boom, uh, some pretty good money there. I noticed I didn't circle anything from 12 o'clock to until after the volatility had slowed down, and really by that time, it's so late in the day. There's definitely a trend working lower here that you probably could have gotten into. There's a failed second entry long there, so that's before the 2 o'clock hour. I'll go ahead and circle that one. But I generally don't circle much or talk much about what happens after the 1 o'clock news comes out because you only have an hour left, and generally that hour can be pretty crazy, a little bit risky. So, um, but anyway, you can see the range there. It's very clear. Your support's right in here around the 2067 or so area, and the resistance is up here around 2079.50 or so. And that held to be true. And the trend lines up and down all played out perfectly today. This one might have been a little bit iffy, but it's still, there's a close outside it, a move to a new high, and then we worked down. And we didn't really work all the way back down. We kind of got hung up there, but that's because people are, you can see how much volume there was prior to the news and then how much volume there was after the news. And people just are scared of it, and and it's wise to be scared of it because it can be so volatile. And so, even if you know where prices are going, it can move so quickly that you can't react properly. And that's the real problem. So, you got to be able to, the price action has to move at a speed that you can see and trade it. And sometimes that's hard to do. So, um, here's what I saw early on. We had a two-tiered channel working up. I really got this off the high side. You can see that working up through there. And I moved it down, and of course we bounced right there at it. And then you got there's actually a failed second entry short right here, but you don't get a very good setup or signal bar, and notice it comes back. So just wait, don't take a bad trade, and when it comes back and it kind of confirms the trend line right there, then you can go long, and you got plenty of room to get out before getting back to the highs. There's not a whole lot of room before that, but that's kind of common. You're mostly concerned with this high up here. And notice we get right to it. We pull back again. We get a first entry. We pull back. We get a second entry. Again, this is not a great setup. This is one you might avoid. But because it's right off the trend line, it's the first break, and everything's working up. The bias is kind of up. Um, it looks a little bit rangy already, but there's enough room to get out before you get up here. So I like that one. This is a breakout pullback long, but that signal bar is just so horrid that you can't risk that trade. Would have worked, and it pulls back again and bounces again, but you got a close outside here, so I think it's just too risky, and to take any of those trades. It's just really risky, and you could have taken them. They worked. Um, it's just a calculated risk. But if you took this trade right here, you didn't get any runners on this one, but if you took this one, you got a runner working. So why risk another one? When you would probably be better off just to let that runner run rather than adding on to it. Now, if it's a great setup, I'm all for adding on or jumping back in. And I mean, there's nothing better than adding on a couple of times and having a nice load of runners and watching them go for a long way during the day, and because that's when you really make some big dollars, and it really changes all your profit factor and your profit percentage. So I'm all for that, but when you're going to add on, it needs to be a sure thing. So if you weren't in, you might have considered taking these. I wouldn't take this one because you have to go long at the high of the day. This one, and maybe even this one, but the fact that this one didn't get back to the center line, you see it's losing momentum, and that's your first clue that you're probably going to reach a new high and probably reverse, and you actually do that here. Notice all that congestion way away from the EMA, and it breaks higher and fails and turns down. Look how bearish that bar is, and look how much room there is to the EMA where you know you're likely headed. You've had your break, couple of legs up, and if you measure those first couple of legs, I do believe that it's pretty close to a measured move. There's the first leg, and that's a perfect measured move. So, and then that big bearish bar, that's going to be probably good back to the EMA, and that's exactly what it does. Easy scalp, it pulls back, no runners, but it takes off again. It's tempting to enter here, but the way that EMA held, I think you got to wait because there's a chance it may go back and test those highs one more time. But it just shoots right on through the EMA and then pulls back and tests it from the underside. But I like this short mainly because it's near the trend line, and this trend line is obvious from the low side, and it fits perfect on the high side. But look at that big bearish bar. It's a failed second entry long. Just go short there, and look at it go. And any runners would have been safe. You ride this all the way to the, and this is where I would have looked to exit, right down here. If you got all of that, just exit down here near these lows somewhere. There's a chance it could go here, but this was your last double bottom, so that's your next likely place for a sure bounce. And of course you get it here, and you had your break, and you're way oversold, and look how far this second entry off, counting off the low, is from that EMA. And you've already bounced, you've already made a high up here, you've already had a double bottom, and you bounced twice at that same spot. It's tempting to take that first entry, but you better, on a big move down like this, if you're going to risk getting in there. And I went back and forth about whether or not to make this aggressive, but I think this is a smart trade, to be honest, and so I just made it blue. It could be considered a little more aggressive, but it's such a smart play. The odds are really with you that you're coming back to the EMA, the trend line, and you see it hesitated the trend line, then it got to the EMA, hesitated, and this would be exactly, and let me show you this. Look how bearish that bar looks right there, but notice it's an inside bar to that one. And this is going to be so tempting to go short, but if you're seeing the big picture of what's going on, the first thing I'm thinking is we're fixing to have a failed second entry long, and I'm going to grab another long and probably ride it all the way to the top again. And I was halfway right because we got the failed second entry short. But don't be going short right there, especially once you got this fourth bar and it never could break lower. It's telling you something. And then it does break lower and it closes back inside. It breaks lower once more and turns up and goes out the other side. Just go long right there. Quick, easy move. It takes off. And guess what? Any runners were safe here. And you could have ridden this all the way up here, or at least until you got a break. And it's real iffy if you got a break here. So wasn't quite sure if we had a break. This actually closed outside, but sometimes you get this one closed outside. But sometimes when you get those kind of closes, they're not convincing enough and people ignore them. So you just don't know. You got to be real careful after that. But when you got the second, you got the chance to go long here. I like going long on that first entry. It's a little more aggressive, but you're probably going back up to here, you figure. And when you get the second entry right here, and this doesn't look like a real bullish bar. It looks kind of like a doji, but it's one tick from closing it's very high, and it traded all the way down to here. That's a bullish look. That's a bullish tinted bar. It's leaning to the bullish side. So take that second entry, and you got another great move up. Of course, and then you start moving lower. You get a second entry long here, but you don't want to take that. This is almost a repeat pattern of this right here. Notice how you work down, it bounces for just a minute, then it pushes on through and it pulls back and it gives you a failed second entry long. And look at that big bearish bar, just go short right there. And this one was a little bit scary because it hesitated, but it ends up working out. And that's why I say just put your stop above your signal bar and leave it alone. Don't monkey with it. And that got you into the 12 o'clock hour. I don't think you want to trade in that 12 o'clock hour because you get just junk like this. But you can see the price action still worked. We just headed down to the lower side where it bounced again. And this was not moving that fast until right in here. So it really didn't take, actually it kind of took off right here, I guess, right at the 1 o'clock hour. But it was not moving extremely big bars like it did later on coming up through here. It did move pretty quickly though, because you look, there's this bar closed at 1 o'clock, and by 1:07 we were way down here with, so it still moved pretty quickly, but it wasn't as crazy. A lot of times it'll start moving like that instantly, and in less than a minute you get that whole move like that. But it moved pretty quickly down. Like I said, this is a hard trade to take. There's a lot of things going on, but it's a very smart entry, very low risk, because you just don't get that far away from the EMA very often. And when you do, when it snaps back, it's pretty fast and pretty volatile, and that's exactly what happened. And if you caught that trade, you ride this all the way to the top. You don't know it's going to do that. But that's why we hold runners, especially at the key entry points, which are down here and up here. And if you'd have traded any of those and held a runner, you ride it all the way. You didn't get to with this one, but if you'd have taken this entry right here, which I think you'd been better off to wait on a second entry, which didn't come till here, you could have ridden this one all the way back down to this little double bottom when you saw the kind of reversal pattern. But that's pretty much what I saw today, and this is an obvious range. You can see prices swinging both sides of the EMA, but you're getting pretty good trends off the low to the high, the low to the high, the low to the high, low to high to the low, low to the high, and by that time, you're late in the day. And this is a failed second entry long here, big bearish bar. I'd just go short right there. Another quick, easy move if you're still trading and want to take that. It's right before the 2 o'clock hour, so possibility. But let me just back out a little more. But you can see that clear range with clear. Excuse me, the summer pollen is hit, or the spring pollen, and my throat's bothering me a little bit when I get to talking, so I apologize. But anyway, nice clear range. I love these kind of days. I don't really like FOMC days. I like to be done well before noon on those kind of days if I am going to trade them. And you don't want to miss out on a move like these two moves. And that's done by 10 o'clock. So that's 3 hours before FOMC comes out. But you can see how things slowed down after that. And that's why we probably didn't make the high there, is there's not enough people trading anymore, and it's just more choppy. And I mean, I've seen it where it gets stuck in little ranges that are just tight, no bigger than a point or two, or even a point. So, you're going to get that on these kind of days. And then when the news comes out, it's going to go wacky for a few minutes and then wait for it to settle back down and reevaluate from there. And that's the only way to trade these kind of days. So, but I hope you had a good day today. I hope you didn't, just don't try risking into that noon hour. Unless you get a really good setup like this one right here. This was a good setup. So just pay attention and be real careful at trading afternoon, and wait till the volatility is over before you get back in if you're going to keep trading after the news. And it doesn't matter whether it's FOMC or any high volatility news, that's how you want to play it. So I haven't even looked to see what the Fed's said today. Don't really care. I guess I do care if they raise rates or lowered them. It's going to affect us in some way. But, just looking at the price action, I'm guessing no change, status quo. But I'm going to go look here in a minute just to see what they came out with. But generally, I don't care what the news is. I do about the FOMC because I keep up with interest rates. Being a property owner, I care about interest rates and things like that. So I generally want to know if they're raising rates or lowering rates or if things are status quo or whatever. But generally, I could care less about the news, and and it doesn't matter what it is. It wouldn't matter if you knew it ahead of time. It isn't going to help you because you don't know how it's going to affect the market. You got to wait and see what the price action's telling you and what prices are doing, and go from there. So the news is irrelevant in the big picture schemes. I know there's some people that like to trade the news, and if you're good enough and you can catch something like that, you can see why they like it. But I can tell you, most people that trade the news lose money. Most people that trade lose money, so that's nothing new. But just be careful if reading these strategies that trade news, because most of them end up losing their shirt in the end, um, because it gets so volatile that even your standard stops can get stopped out. Yet prices will still go exactly where you thought they would go. But you gotta have such big stops, and you have to take such big drawdowns that it's not worth the risk, in my opinion. So the risk to reward is not very good. So, um, but anyway, I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.